Today's episode of the Big5D podcast is brought to you by Duda, a professional website builder trusted by 18,000 agencies and SaaS platforms. Every 17 seconds, a new website is built on Duda. To learn more, visit them at duda.co. That's duda.co. Welcome to episode 31 of the Big5D podcast. I'm your host, Charles Laughlin, and I'm content director for Big5 Digital. We're an events and content firm specializing in B2B technology in Africa and the Middle East. Today's guest is Firas Ahmad, CEO of AzamPay, a payments platform that's part of Tanzania's Azam Group. Firas is a great guest because he thinks deeply about the broader fintech ecosystem in Africa. So I always love to get some time with Firas to talk about the state of fintech in Africa. And that's what the bulk of today's conversation is focused on. How does fintech and mobile money in particular need to evolve to serve the needs of African consumers and merchants? Our bonus discussion today is all about the future of cash in Africa. If you're a Big5 member or a subscriber to our SMME Tech Report newsletter, you can access the full podcast free of ads. For everyone else, the free version is pretty great too. Enjoy the show. Ross, welcome to the podcast. Good to have you back.
Great. Thanks, Charles. Great to be here.
For the audience, they may not be aware, we've talked a few times, but we had you on our virtual event, our virtual fintech summit last year, and we talked about a number of interesting things. And I thought maybe we'd kind of revisit a couple of those topics and maybe talk about a few other things. But before we get into that, your company AzamPay launched something called AzamPay. And I just wanted that happened since we talked last. I thought I'd give you a chance to tell us a little bit about what that is and kind of update us on how it's going.
Yeah, so we launched AzamPay back publicly in March, and we've been growing slowly but surely since then. Basically, AzamPay is similar to the other mobile wallets that are kind of now very famous in East Africa, starting with M-Pesa in Kenya, and then of course you have Tigo Pesa, Airtel Money, MTN across East Africa. So I think the thing that's maybe a little bit different with what we're doing with AzamPay is we're not SIM dependent. So we don't have a parent mobile network operator. We have essentially a mobile payment wallet. We have a license from the Bank of Tanzania to provide e-money services. And we do those in partnership with our partner networks as well as on the smartphone apps. So, for example, USSD menus would be available through our partner networks, and then if you have a data connection, you can always download the app and make a transaction. So, just to give a sense of what we're trying to do with AzamPay in terms of the overall approach, we're really focusing on the merchant sector. We believe that there's a big opportunity to expand the number of payments that are being done digitally right now. Look at a place like Tanzania. You have a very strong mobile money sector, but still 90% of payments are done in cash. So we feel like there's an opportunity to dig into that 90%. We're not necessarily trying to recreate the wheel or cut and paste what's already out there, but build some incentives and some structures and some products through the mobile money space that target that underserved part of the transaction community.
So the fact that you're independent of an MNO is interesting, but why is that so? Is that important, or why is that important?
I think it is important because I think there are different incentives for different entities. So I give you an example. One is one problem that we're trying to solve is around managing trust, particularly in the e-commerce space. So e-commerce is still very, very much in its infancy in many parts of Africa. In Tanzania, for sure, I would say it's probably less than 1%, maybe less than 0.5% of transactions are e-commerce related. And the question is, why is that the case? Because e-commerce is widely used across the world. Many parts of the world, even parts of Africa, I can imagine, have more e-commerce than e-commerce.
It's grown a lot, yeah.
Right. And one of the things that we kind of thought through was around how are the payments managed for e-commerce transactions, how are the digital payments managed for it, and how can they help facilitate those transactions. So if you look at the wallets that are in the space, typically digital payments are done either through wallets or banks. The way that those transactions are managed are structured in a way that you're not really addressing the key concerns of e-commerce, either buyers or sellers. So what's the main concern between a buyer and a seller in e-commerce? Is primarily trust. In e-commerce, you're buying things from people you don't know. And since you don't have like these big box stores in Tanzania, you don't have branded e-commerce entities. Right. You're simply buying off of either Instagram or WhatsApp or that type of a selling situation. So in that case, you need to bridge trust. How do you bridge trust? If the payment service doesn't address that. So for example, if I make a payment for, let's say I'm buying your shirt, you send it to me, I make the payment online, but the shirt that I get isn't the one that you put in the picture. How do I manage that? The payment is already gone. If I call the MNO wallet, they're going to say, well, your payment is successfully transacted.
We've done our job. Yeah.
Yeah, it's not part of their business. Mm-hmm. So we feel like disaggregating us from the MNO, because the MNO is really in the connectivity business, right? It's in making connections, voice connections, SMS, data, and now connecting people via payments. But it's not necessarily in the commerce business. And so from our perspective as kind of, I guess you could say, a fintech, or as a company that also has an e-commerce portion to it, we're in that business, right? So we have a B2B e-commerce platform. We understand the issues. And so building a payments platform that addresses those issues more directly, I think can open value for consumers and businesses, but also I think it increases the payment space. I think everybody will benefit, including the wallets that aren't providing that service, because you'll just have more people transacting, and they'll be looking to, interact between the different wallets. There's interoperability in Tanzania, so you can move money one place to another. So we just think it'll be beneficial to everyone.
Okay, so I want to dig into the whole, how does trust practically manifest itself? Using that shirt example, let's continue on that.
Sure.
I get the shirt and it's the wrong size, or it's completely different.
Right.
What is the process then from there for me to rectify that transaction?
Yeah, so a solution that we're working on for that is around managing the time that the money moves. So for example, let's say you buy a shirt and let's say in the situation where the seller sends the shirt to you but does not receive payment until you've received the shirt. Okay. If that's the case, then the shirt could come to you and say you were happy with the shirt, but then you say, oh, you know what? I don't have any balance left in my wallet. I'll pay you tomorrow. But thanks for the shirt. I'll get to you when I can.
It's not good. Yeah.
Yeah, it's not good for the seller, because now the sale is consummated, right? As far as the guy's concerned, he's wearing the shirt now. And it's really not his problem whether the money is sent or not. It's now the seller's problem. So in that scenario, you might be able to convince the individual to buy the shirt, but you'll not convince the seller to sell it in that method. And in the opposite, if the buyer pays up front and, like as we discussed, the shirt is torn, then how are they going to get their money back? The seller, it's not really his problem. And then the mobile wallet is not really interested in getting involved. So we think that by building a kind of payment management system where, say, for example, I buy the shirt from you, and the money is deducted from my account. Okay, so I don't have that access to those funds right now. It's with a third party, meaning the mobile wallet or the payment service provider. But it is released when the shirt is, let's say the shirt is delivered. Let's say it's triggered by delivery. Mm-hmm. So there's a third party or a logistics company that comes in and delivers that shirt, and it's verified that that shirt is delivered. And the customer has not complained that there's a problem with the product. Money can move, right? And no one should have an issue with it, because the customer is happy. There's proof of delivery. Could be a picture, could be some type of confirmation, and the seller is happy because now they've received the money. So I feel like that type of a system that kind of takes into account all the various factors that could go wrong, and then addresses the concerns of each individual at each step, is really what could build trust between unknown parties on that type of transaction.
Okay, that's great. I want to pan back a little, sort of the broader mobile money space. You've had some things to say about, mobile money. It's great and all that, but in a way, it's become such a lucrative business that it has kind of stopped innovating. That was a year ago when you said that, and you wrote a piece about it maybe more than a year ago.
Mhm.
And I just want to get sort of an update on sort of your view of the current state of play in mobile money in Africa. How has it
So
progressed?
yeah, it's a good question. I think things are definitely changing. I think you have some different business models that are emerging. So one that we've seen that has had gotten a lot of traction in Senegal, Wave, the company Wave has come up with kind of I think their business model was around free cash out and 1% or something like that on the money movement. And of course, it may work in certain locations, may not work in other locations, but at least there is some innovation going on. I do think that the legacy players are also very much attempting to innovate. So I've seen some new products come out around agriculture, around financing, around credit, and all these types of things, trying to extend different types of services to consumers. So that's also always encouraging. Whenever consumers benefit, that's good. But at the same time, I still think there's ways to go, and there's a lot of space to innovate in the mobile money space. And I come back to this question of, are we moving money or are we facilitating commerce? Because if we're focused on moving money, and that's really what's the primary case, right? B2B transfer, it's one type of business. If we're facilitating commerce, it's a different mindset. And so I think it's really great to see new players come in and address different sides of that coin.
So you mentioned Wave. I think they're one of the handful of relatively new unicorns, if I'm not mistaken. Not that, though, to be honest, that whole unicorn thing kind of silly in my view. But anyway,
Right.
that aside, do you think that new entrants like that are pressuring the legacy players? Do you think any of the movement you're seeing among legacy players is a response to new entrants in the market, or is it just the evolution of the market?
Yeah, absolutely. I mean, even our own experience, we launched in March, and I saw a ton of announcements from the legacy players in the mobile money space over the course of a few weeks after we launched. So for sure, it's not that they're not paying attention. I absolutely think that they are paying attention, and they are trying to either improve their services or try and figure out how they're going to address those challenges. So I think it is driving that to some extent. At the same time, the market is dynamic, and also, there are certain areas of activity that myself as AzamPay can enter into that the legacy players wouldn't have any interest in. So one would be logistics is a good example. Okay, so that example we made about the shirt being delivered. I don't see any in any future where you would have a large mobile network operator go into warehousing and logistics on e-commerce. I don't see that happening because it's not really their core function. I can't imagine the boards up in those European cities would approve of that. So that's an area where I think the new players can come in and address and look and see how do you create value for consumers, and build products around that integrate payments in a way that creates a new user experience, a new type of opportunity. It makes certain types of businesses viable that might otherwise not be viable.
Right. So I want to move on to a couple of different topics. We wrote a piece for our newsletter recently, and you contributed a comment to it about, how is the sort of global freeze in VC, which, we're still seeing companies get funded, obviously, but there has been a change, it's fair to say, since earlier in the year. And the general consensus has been that Africa is different, that because it's so underfunded, compared to other parts of the world, et cetera, that, the funding should keep coming. And there's seems to be evidence of that because the funding has been still pretty robust this year, though I'm not I guess depending on where you look, there might be some signals of it's slowing down. But then I have talked to others who say that certainly valuations have changed, and there's been a change in how investing has been approached here. I just want to get your sort of broader take on what you think the sort of the fallout will be from what's been happening globally in Africa.
Yeah, I think there will be a fallout to some extent. I mean, I don't think it'll be as pronounced as you might find in other parts of the world, like you said, because funding has not necessarily been that in such large volumes. But I do think there will be, and in particular, I do think there will be some additional scrutiny on the business model. And that's what I'm seeing a little bit of. For example, you could talk about gross merchandise value a lot in sub-Saharan Africa last year and raise a lot of money. And now I think that story is less compelling to an investor than it was last year. And I think that's not necessarily a bad thing, because in Africa in particular, if you drive growth on gross merchandise value that doesn't have a gross margin associated with it, or a very thin or almost non-existent gross margin, you will drive revenue, but you're not going to create a business that would work, because in Africa, switching costs are very, very low. It's hard to create a business in Africa where there's a high switching cost, because consumers simply can just do without it. Switching costs is not that I'm replacing it with one thing or the other. It's that they'll let it go. They'll just abandon it.
Right. One example, competition is nothing. That's always a problem, right?
Yeah. Yeah. When you're competing with nothing, it's hard to win, regardless of how high you can't raise your price that much. So anyway, the example I would reference is, I remember there was a conversation I had around solar home systems in Africa, in Tanzania, East Africa region, where there was a lot of sales happening. This was like 3-4 years ago, where you had donor funding, they were driving adoption, a lot of people were buying and putting on their roofs. And then, some of these companies grew so fast they couldn't service those solar panels, and these are all sold based on this incremental sale. So you pay a little bit, pay as you go solar. But the problem with pay as you go solar is there's no ownership of the asset on the part of the consumer. So if it stops working or you don't want to pay, you just abandon it. And so you had a lot of abandoned solar home systems that ended up not, there was a lot of sales, gross merchandise value was very high, but when you look at it a year down the road, the business was not there. So I think that's where the rubber will hit the road on the investments. I think there's still huge opportunities in Africa, and I can imagine there's still VCs that are looking at it very closely, but focusing on making sure that you're not building unit economics that are not in a long-term sustainable way, I think is very important at this point.
Right. Yeah, that solar, and once they stop paying the still the capital cost of all that solar equipment that has to be accounted for. So, yeah, that's interesting. The other thing that has sort of been interesting in watching Africa is kind of watching the evolution of sort of this notion of foreign investment versus sort of homegrown investment, I guess, for lack of a better term. And I think that, and you kind of said before how there's real benefits to having more homegrown investment because it's closer to the real problems that are being solved. And do you think, are you seeing much progress in sort of moving towards a more African-based investment community? And do you think the sort of the global slowdown is going to either accelerate or decelerate that?
Yeah, I do think so. I know that there was a fund, I can't remember the name.
I think I know what you're referring to, and I can't think of the name either, but go ahead.
Kenya. There was a fund that was launched in Kenya recently that was made of local founders. I know that there's a quote-unquote pay stack mafia that's developing in Nigeria. So there was a pay stack exit, I think it was about 2 years ago, for about 200 million or something like that. And so you have a bunch of those founders, I guess early employees, that are working together to fund companies. So I think that's certainly happening. I think it's going to be it's going to be based on the country. So I know in Kenya, in Nigeria, in South Africa, you get a lot of investment. Whereas some of these more satellite countries, right, like even a place like Tanzania or Uganda, or Uganda may be a little bit more advanced. Let's say parts of, Central Africa, Zimbabwe, Zambia, you might not get that, right? Because you're not having these types of exits, and, that's not happening. So, I do think that progress is being made, and it'll be interesting to see what kind of companies come out. I know there was a food delivery app in Kenya that folded a couple months ago.
Kune Food. Is that
Yeah.
Yeah, I've written extensively
And
about that one. Yeah.
Right. And a lot of people were upset because the founder was, not African and was able to raise so much money so quickly, and people were investigating. I mean, some of the stuff I saw in there, almost every startup goes through many of those things. It's hard to be perfect on anything, but at the same time, I can understand the frustration of local founders as well, who might have great ideas and struggle to get them funded. So
yeah,
it would be great.
Yeah, I saw an interesting parallel, and maybe it's a stretch, but when the whole Andreessen Horowitz, Adam Newman, this is going back to the Adam Newman funding. I sort of, some of the reaction on Twitter felt similar to the reaction to Kune Foods, in the sense that, what the hell?
Yeah,
I've got this business that's making money. I can't get a phone call, and then this guy fails his way to the top. So I mean, there's maybe that sense about some of this. It's maybe a bit of a
yeah. I fully agree with that. I mean, I get just as annoyed about the Adam Newman type thing as well. I mean, part of it is also it's understandable, because if you look at what he did, really, it's really branding, right? I mean, I think what they're seeing is that they see a kind of quasi celebrity business guy,
right?
And what they're trying to do is build a company around that brand, and so they throw money at it, and that kind of becomes a self-fulfilling prophecy, like the other one that it kind of reminded me of was Clubhouse. Remember Clubhouse?
Oh yeah,
blew up. Just like
it had $1 billion valuation at one point, didn't it?
Yeah, it was insane. And for 6 months, nobody could do anything but talk about Clubhouse. And now I haven't opened Clubhouse in like 8 months.
Does it even exist?
Part of the reason I remember that it blew up is because early on they were able to get Elon Musk and Mark Zuckerberg to host rooms, and when that happened, like, just everybody piled on. And so, like, the tech itself, actually, the tech is not bad, because if you look at Twitter Spaces, it was actually a lot better than Twitter Spaces. Twitter Spaces was so glitchy. But at the same time, the tech was not like, you're definitely not launching rockets to the moon or to Mars with that tech. It's just, it's a room with a bunch of people. So, so what it came down to was, who was backing it, what venture fund was backing it, what kind of TechCrunch articles you're getting, and all that stuff. Then becomes a self-fulfilling prophecy. So I think there's a part of that goes on in Africa. I think there's a tech press. Some of it's kind of like, it goes for the lowest hanging fruit. And if you know how to be the lowest hanging fruit, then you're going to get the attention, and then it'll be like, somebody will pay attention to you and give you some money. So yeah, I don't know. My whole take on this is a little different. I'm actually not in the VC game. The company that I'm building is with the Azam Group. It's almost entirely funded by the Azam Group, and so it's a local company. Everything is coming from the local company, and I'm working with them. Now, there's benefits and advantages to that. Obviously, there's some constraints with that, but the benefit is, I don't have to deal with that whole VC game, which I think also perverts some of the incentives of the startup itself. So, like what I was talking about, gross merchandise value, I can imagine there's probably a guy sitting in a VC fund that's like, I want to see numbers, right? Show me numbers. And then if you need to inflate them, there's ways to do that. In Africa, anything can happen if you find some creative people to help you do it. But whether it's real and either foam on the sea, or if it's real, it's sometimes hard to tell, especially if you're not on the ground.
Yeah. And I think it's hard to build if you want to build a business that just, solves a problem in Kenya and just stays on that, or pick a country, it's hard to raise money, because they all want you to move. The 5 minutes after you've got traction in Kenya, they want you to be in 6 other markets. Yeah.
Exactly. And I think this is a little bit misguided. I mean, I can understand on certain applications, like on, say, payments, but even payments is extremely local. I mean, if you look at payments in even Rwanda versus Tanzania, there are differences. So it's not like a one-size-fits-all solution. But I would say in particular, when you start getting into you have the digits business, the ones where everything is on the computer, and then you have the Atoms business where you actually have to move things around. Once you get to the Atoms business, you to take a Pan-African strategy from the start, I think is a total disaster waiting to happen.
Yeah,
I think
In fairness, I had this conversation with a VC like a week ago, and his point was on the digit side, you should be expanding into new markets fairly aggressively. His point was not so much around the Atoms. But you've seen it with the Atoms businesses too. Like the marketplaces that require a presence on the ground. Where you have to, it depends, but not all of these businesses are purely Atoms. Some of them involve inventory and local presence and such. It feels like everyone's going into Nigeria with yet another whatever it is.
Yeah, I'll give you a very good example of where this gets screwed up is rideshare. Okay.
Yes.
Rideshare. So it's a good example. Tanzania, right? Uber exited rideshare in Tanzania because they ran into some regulatory issue. Actually, I heard some of the story around this, which I won't go into the details of that. But the point for me, for a company like Uber, so Uber is like, it's an insane global brand, if you think about it. Like, there's a guy at the gate of the office here in Dar es Salaam. He knows Uber, like he knows the brand Uber. He doesn't call it a taxi, he calls it an Uber. Okay? So even that guy knows the Uber brand. But Uber has exited, right? It's done this incredible job of marketing the concept of rideshare across the entire world. It's probably one of the most recognized global brands for mobility. But they can't make money in these markets, in particular because they don't understand the dynamics of payments. They don't understand the dynamics of the drivers and what their expectations are, how they manage their supplies, like fuel and maintenance and things like that. So for me, rideshare Uber is a global brand building a business building a local business, right? I really feel like rideshare is a local business, and it's also not a great pure play business, right? If you have rideshare plus, I can imagine it creating some additional values, but rideshare by itself, like I said, switching costs are practically nothing.
Yeah.
I can ride an Uber, I can ride the local one, right? I don't care which one. Who's going to pay me faster? Who am I going to make money with? Where am I going to get the rides from? Who's going to understand my needs? And it's very hard for someone outside of Tanzania to come in and understand exactly what those concerns are in a way that drives adoption.
Well, it's one reason why most rideshare apps want to be super apps or some sort of version of that.
Right.
The Big5D podcast is a production of Big5 Digital. The podcast is written, produced, and hosted by me, Charles Laughlin. Our aim is to bring you great conversations with technology leaders in Africa and the Middle East. If you enjoy this podcast, please subscribe on Apple Podcasts or wherever you listen to podcasts. If you become a Big5 Digital member or a paid subscriber to the Africa SMME Tech Report on Substack, you'll have access to the full-length, ad-free version of this podcast. Visit big5digital.org to learn more. And if you have a guest recommendation for us, please drop us a line at big5dtv@gmail.com. That's big5dtv@gmail.com. And tell us about them. And please mark your calendar for the Big5 Summit, 14-16 March in Cape Town. This is our flagship annual event, and please plan on joining us. Thank you.